In this video, I will show you two highly advanced and accurate dynamic support and resistance indicators that will change your trading forever. These tools are very handy when analyzing price action and anticipating where the market might turn in the near future. For instance, a dynamic SR indicator can help you determine whether a breakout is likely to hold or if a reversal is about to take place. Whether you're a day trader scanning the markets for short-term opportunities or a long-term investor looking for the best time to enter or exit a position, these indicators will provide invaluable insights. So stick around, this is not something you want to miss. Without further ado, let's dive into it. So, the first indicator is called Keltner Channel Bands by TradingView. Chances are you've never come across this tool, but you might have seen similar options. The reason I like to use this one is because it looks super cool and comes with signals. The Keltner Channel Bands is a volatility-based technical analysis indicator that creates a channel around the price of a security to offer traders a visual representation of the security's normal price range. This indicator consists of three components. The first component is the middle line, which acts as a reference for the average price. When the price is below the middle line, the market is controlled by sellers. When it is above the line, it is controlled by buyers. The second component is the cloud. It is calculated by adding a multiple of the ATR to the middle line. The ATR is a measure of volatility, so this cloud adjusts as volatility increases or decreases. The upper cloud acts as dynamic price resistance. It can also change its color to reflect on how overbought the market is. The lower cloud serves as dynamic support. When it turns green, the market is oversold or cheap to buy. When price touches the upper or lower cloud, a tiny red or green triangle appears on the chart. This signals a potential price reversal. You should, however, keep in mind that not all of these signals have high accuracy. That's why I'm going to show you a smart strategy with this tool focused specifically on catching fake breakouts. For this strategy, what we need to do first is identify a trend. In a strong downtrend, the price usually breaks below the cloud and the cloud turns green. If we connect these green triangles, we see the lines point downwards. Our goal is to buy at fake breakouts to the downside, not at those that result in further price declines. It is important to see signs of bullish momentum before looking for these fake breakouts. The first touch of the upper cloud after a strong sell-off is one of the best signs. This tells us that buyers have finally stepped into the market, pushing the price up. Once we have that, it's time to look for a fake bearish breakout. These candle bars have a long lower wick. There also must be a buy signal present at the same time the breakout occurs. Now draw the line from the latest green triangle to the current one. If the line is pointing upwards, all the conditions for a long entry are met. If the line is pointing downwards, simply skip the trade. A good way to go about money management is to move the stop loss to break even once the price closes above the middle line. Close the position manually once the candle bar breaks above the upper cloud. This way you can catch really big chunks of the trend. Now let's look at the example of a short trade. So the first step is to identify an uptrend. During a strong uptrend, the price usually breaks above the cloud and the cloud is red. Again, selling during these times is very risky since the market makes higher highs. We need to see signs of a trend reversal first, such as the price returning to the dynamic support zone. Only then will we start looking for fake bullish breakouts. Once we spot it, draw a line from the latest red triangle to the current one. A short trade is valid if the line points downwards. Apply the same money management rules as for long trades. Okay, so this was the first indicator. I hope you guys liked it. Let's move on to the second tool. This one is actually my personal favorite since I use it on a daily basis. By default, this tool comes with at least 7 different features that give you pretty much all the information you need about the price. Currently, I have enabled buy and sell signals, reversal bands, 4-hour support and resistance levels, and the volume profile. The reversal bands act as dynamic support and resistance. The signals are highly accurate, especially when price gets rejected by both dynamic and fixed levels. Here is an example of how I would trade with this strategy. This trading method involves searching for fake breakouts as well. When looking to buy, wait for the price to break below the 4-hour support level. At the same time, it must drop to the lower reversal bands. The majority of retail traders would go short here, expecting the price to drop even further. But the momentum slowly shifts and the price closes above the key level. One candlestick later, a buy signal is issued. You can still buy at this price, but I would suggest waiting until we have a bullish trend on the dashboard and a breakout from this range. Paying attention to the volume profile is also helpful. It's not recommended to open a trade at the price with low trading activity. As for take profits, you can target any of these key levels. Setting a trailing stop loss is also a good idea to maximize those profits. Here is another example of a fake breakout. So first the price broke below the support level and touched the lower reversal band. Immediately after that, it broke back up. By looking at the volume profile, we can tell there is a squeeze in this area. Opening a long trade on the buy signal is a slightly riskier entry. A safer entry would require waiting for a bullish trend on the dashboard and a price breakout to the upside. Okay, now let's talk about short entries. First things first, spot a fake bullish breakout. It is when price closes above resistance and immediately gets rejected. During this breakout, the price must also extend into the upper reversal channel. A sell signal will appear shortly after the correction. However, you should not rush. Wait for a bearish trend to be shown on at least one time frame. Make sure the volume is high. Target the next key levels and secure your profit once the price reaches them. You can access Easy Algo V8 as well as 2 other essential tools by clicking the link in the comments. Easy Algo offers paid membership. It's 100% worth it, not only because of the tools you get, but a Discord community where you can chat and learn about trading 10 times faster. By the way, if you sign up right now, you will get a 20% discount. Thanks for watching this video. I hope you learned something new. Hit that subscribe button if you haven't already, and see you next time.